Hey folks, good morning. It's Hari Swaminathan. What I wanted to do is you must have seen an email from me a couple of days ago about a very explosive type of intraday trading system for the indices. And what I thought is over the next few days, I'll create some videos. So just to give some history, this is a paper money account. Started at about 100,000. It's about 86, but regardless. Let's the whole plan is over the next few days, if you can get an idea of what kind of trades that that's going to happen, so that will help some people understand what we are talking about. All right, so we get started today. And for the jobs report was this morning. It was decent, 211,000. So markets have gone up. I did have something else to do this morning, so I missed the open. So right now it's 9:55. I don't have any open positions. As you can see, the markets are nicely up. And let's go look at the ES charts. I always look at the ES charts because it gives you good volume information. Now, as you can see, it's moved up nicely. So the indices are looking good. And even all the internal indicators that I'm looking at are looking good. The only problem is because I missed the open, we are already at a high level, and so the reward at this point is somewhat limited. So what I want to do is keep pausing this video, and when I see an opportunity where either on the call side or the put side, when there's some selling going to come in, I'm going to take the trade and we'll record it, and we'll do this for a few days. Now also, what you're going to see is this screen. What you're not seeing is 4 other screens that I have, which has a total of, let's say, we have 4 indices, and each of those indices has about 3 to 4 indicators. So we're looking at about 15, 16 indicators. Now, this may sound complex, but actually it's not. As I mentioned in my email, some of these indicators are available on the platform, and some of these indicators are customized specifically to get a much more deeper look into the market internals. And really, that's those are, I think, the key to giving you the confidence to take the trade. So as it stands right now, markets are at a high level. So I'm going to pause the video. I'll come back and we'll see when the next time to take a trade is. In general, using this system, we take anywhere from 2 to 5 trades. If there's a lot of movement, volatility up and down, it will probably have 4 or 5 trades. If not, we'll probably be closer to 2, maybe 3 trades a day. So we are looking. So over the next 1 week, hopefully you can get a look at about 20, 25 trades, and you'll get an opportunity to see what we are talking about here with this system. So that's the plan. I'm going to pause the video and we'll come back when there is a trade opportunity that is showing up. Thanks. Okay, it's 10 o'clock and I see a small opportunity potentially developing on the SPX. So again, this is based on signals, triggers, and a deep look into the market internals. And what it's telling me is that potentially now the SPX can move up, but I'm just going to wait and so, as I mentioned, there are about anywhere from 10 to 15 indicators that you can look at, and the whole philosophy is, if more and more of these indicators are telling you the same thing, then obviously there's more conviction in that. So right now I'm looking at about 2 or 3 indicators that are telling me that there might be a bounce because it's come down a little bit. I mean, it's still high. I mean, it's still up 16 points, but it's come down from its high, which was like about 19 points or so, and seems like there might be a bounce. but I need to make sure that we have more confluence on that indicator. So I'm going to wait for that and see if there is see if there is more indicators that start telling me the same thing. Thanks. Okay, so it's giving me a little bit of, so not totally convinced, but what I'm going to do is I'm going to go for the 2075 call. SPX is at 2067, and, I'm just going to, it's a cheap option, it's 275, so I'm just going to buy this option, and let's, confirm and send. And let's see, I'm just giving the market price. So it's 255. I think we paid for it. So let's go see. We paid 255. So let's see what happens. So it's already gone up. You can see it's moving up. So that signal was good. Normally I might have gone for about 20 contracts, but since it's already at a very high level, I didn't want to do that. Now, also, the choice of the weekly option is something that I do that now because I rely so heavily on the signal. I've taken an option that is expiring today, but generally, on a Friday, I could go to the next week also. But because today, because of the non-farm payrolls, good number, and so I feel there's going to be some bullishness. And what we'll do is we'll keep a close watch on this position, and because we know it's expiring today. So the mark price of the S&P is 2068, whereas our option is 2075. So it's about 7 points out of the money. So we have to be careful about the theta decay. As you can see, the theta decay is very high. 2,400 today, but we've just gotten into this position, so we'll see how it goes. Okay, so even though it's down a little bit, it's telling me that it wants to go up. Some internals are giving me that signal. So what I'm going to do is cost average. So buy, many times I double down. So, that's perfectly fine. So let's see if we can get executed on that. Working order. It should get executed because we are giving more than what the mark price is. So yeah, so now we have 20 contracts. What we have, the value at risk is, well, let's see, we're down 450 and there's 4,300. So say about 4,600, 4,700 is our risk on this trade so far. And we'll continue to monitor, and I don't think I'll add any more because given that today is a Friday and we have to be careful about this option, so I'll be moving into a hedge mode very quickly if this loss starts accumulating. We'll come right back. Okay, so I forgot to press the resume button, but what I did, I got a very good signal, so I increased it by 20. So if you see my last order 20, which was just about 10:19, yeah, 1 minute ago, I increased it because I saw the signal coming in. And so this is when you want to move in for the kill because you know that you're getting a convincing signal. So I added 20. So totally now we are at 50 contracts. I'm going to keep this on a tight leash. Our average cost is 2.48. It's going at 3.07. I don't want to lose this profit because this option is expiring today. I do want to try to maximize what we can get. However, at the same time, I don't want to lose this profit. So we started this trade around 10 o'clock. It's been 20 minutes and I see at least 5 or 6 or 7 indicators lining up very nicely. So it's actually a good, good signal. But like I said, I don't want to lose this profit. So I might take it off much earlier than normal because this option is expiring today. So right now it's 2.48. We're going at 2. I'm sorry, 3.1. Oh, now it's going to 3.13. We've got a 4K profit. So I'm going to close. I'm going to book half of it. So let's say 25 because I don't want to give up the profit. So let me book, and here I'll try to get at least mid price. It's still going up actually. Let's see. Yeah, no, I'm going to try to get 3.3 and see. Okay, so sold 25 at 3.4. So, this is a paper money account, so you might get a little bit of an advantage of 5 cents, 10 cents here and there. Whatever be the case, you can still, take that into consideration and do this. So now let's see if this other 25 can also hold up and make some money. But like I said, this trade will be on a tight leash because the options are expiring today. So at this point, I'm just going to let it run a little bit more. So I'll pause it, come right back. Okay, folks, 10:25. It's really looking good. Normally, I would have added some more, but I don't want to do that because of these things are expiring. So I'm actually going to sell 10 more and book the profit. It's going between 360 and 370, 380. As you can see, it's going up. So I'm going to try to get the best price. I'm going to actually try to get $4 for this 10. Let's see what happens. It may not hit there, and if that's the case, I'll bring it down. Okay, it's coming down, so I will bring it down, replace it to 370, which is the okay, all right, got it at 370. So I booked 10 more. Basically, we have now booked P&L for the day is 5,500. This is a trade that started at 10 o'clock. It's 10:26 now, and it's at 3.75. I don't know how long I'm going to keep this. It is looking good actually. It's going up 4.1. Great. This is the kind of trade, you want, within half an hour, boom, you're up $6,000. And so, I'm going to take some more off, and you got to book the profits. So here, what I'm going to do is sell 8 this time. And let's say for 394, 410, 420, let's do 420 and see. Okay, 420. Of course, this is a paper money account, so you get a slightly easier fill. There's no question about it. You might have to give 10 cents, 15 cents less on a real, on the real account. But, regardless, the whole thing is the principle, and see how we can take advantage. I see the indicators are looking a little exhausted, but there's still room to the upside, I believe. So let's see. We're only left with 7 contracts now. So, we've booked most of the profit on this trade already. So, yeah, let me pause it, and I'll come back when I want to do. Okay, 10:29. It is still looking good. It's gone up to 4.2. I'm happy with this trade. I'm just going to close the whole thing, sell 7 at, let's see, 410 for 390, and just get it over with. And, let's just finish it off. So here we are. Let's see what we did on this trade. 6,000. All right. So let's knock off a couple of hundred, 200-300 for, commissions. Well, no, commissions would have been what? 50 and 50. We had, 50 going in, 50 coming out. So we would have had 100. So $100 for commissions. And then paper money gives you a slightly easier fill. So let's knock off another $400 or $500 for that. So basically, 5,500, net is what the profit is on this trade. It's Friday today, so I don't want to hold on to this option for too long. To tell you the truth, the indicators are showing a little bit of exhaustion, but that's normal. The markets will consolidate, but it potentially could go even higher. But at this point, I'm just happy with this, so I'm going to take it off. So that's it for this trade. I'm going to pause the video, see if more opportunities come up a little later in the day, and then I'll start the new trade at that time. Okay, quickly, forgot to mention one thing. So if you noticed, our average trade price was somewhere around, let's say, 2.7, and we had 50 contracts. So that is an investment, or capital at risk is about $13,000, and so this is a 50% return on that. Now, if the trade had not gone in our favor, actually now the market is coming down. You can see it's so we took it off at the right time, and that's important. You got to book the profits, because this is day trading and things can change anytime, and so you want to book the profits. But as you can see, the value at risk was only 13,500, and we made a profit of 6K straight away on that. Now, if it had not gone in our favor, there's ways to deal with that. So if you look at the options, right now this is going, and the next option is going for 150, 165. Maybe we would have got maybe 1.2 instead of 1.5, or maybe $1. But if you sell 50 of these, you're converting it into a debit spread, and you're reducing your risk by 5,000 right away over there. And whenever the market tends to go up again, you can further take action. So that's kind of the philosophy of how this day trading is going to work. First of all, you have to rely on these indicators, and when you rely, if you're still convinced, that it's going to go in a certain direction, you can double down if it's going down. And when more things are coming together and it's telling you that it's going to go up, that's when you move in for the kill by adding more contracts. So that is my philosophy, and how this thing generates 6K to 10K on a winning trade. On a losing trade, we want to keep our losses down, hopefully less than 5K. So that's the goal. Okay, so the markets have gone up a lot more. You can see this option is worth 5.55. So obviously we left some money on the table, and that's perfectly fine. There's nothing, we cannot regret that. Now, my signals are actually telling me that there could be a small pullback. So what I'm thinking is to take a counter trend trade. So which means I'm going to go for a put. And because I'm going for a put, and it's a counter trend trade, I want to be more careful. So let's go in for this 15 delta. It costs only, $1 something. So I'm just going to go for a put and see how that works out. And, we'll see how that goes. Let's see. So 120, I'm just going to give the natural price, so it gets filled right away. So this is not a paper money issue. If you give the natural price even on a real account, it'll get filled right away. So let's see. I mean, the markets are still going up, but I feel there is going to be a small pullback, and that's fine. I won't, I'm not going to be picky about a big profit, but if there is a small pullback, then we can probably make some more money on this. So let me pause it right here and come back. Quick update. You can see it's a little bit down. Markets are strong. Obviously that downward set of indicators that told me there's a pullback, it was temporary, and that'll happen because it's a strong market. So even though there are pullbacks, it may not last very long. So it's a counter trend trade, and so you have to be careful with counter trend trades. We've got a good profit for the day. I don't want to lose that. So if this thing hits a loss of 500, I will probably take it off, because you don't want to play around with counter trend trades for too long. There's no point in doubling down and things like that, because it's a strong market, and you're better off trading in trend with the market. So let's continue to monitor. If it hits 500, a loss of 500, I'll take it off. So on the indicators, actually, what's happening is the S&P is showing some weakness. It doesn't seem to want to go up. However, the Russell and the Nasdaq are showing a lot of strength, and that's keeping everything high. And even the Dow, for that matter, is showing good strength. So the internals for those three indices are looking pretty good, and that's keeping the S&P also at a high level. So we have to watch for that. When three indicators are looking good, then the fourth one will automatically be part of that rising tide. So as you can see, we are hit about 300, and if it comes to 500, I'll take it off and just move on. You're not going to win on every trade, but and especially this is a counter trend trade, so you don't want to mess with it for too long. So let's give it another few minutes, and I'll come back. So right now it is 350. So what's happening? I don't know if the previous part got recorded properly, so I'll just repeat it. The S&P is showing a little bit of weakness, but the Nasdaq, the Russell, and the Dow are showing a lot of strength, and so it's making the S&P also rise. And so when three indices are looking good, the fourth one automatically will rise with the tide. And so I'm not going to give this too long. Like I said, if it goes to a loss of 500, I'll be taking it off because we don't want to mess with a counter trend trade. Okay, so the other three indices are very strong. Nasdaq is looking really good. The Russell is looking really good, and so is the Dow. The S&P, frankly, has a little bit of weakness, and but because the other three are so strong, it's being lifted. And so I really don't want to mess with this for too long. I'm wondering if it's not hit the 500 point yet. So let me just wait for a little bit more and see if I need to take it off. Okay, it's getting very close to the 500. So let's see, what our trade price was 1.2. Right now it's 75. And so if it goes to 70, I want to just close this one. So I'm just going to prepare to sell this if the mid price falls to 70. I'll just get out of the trade. Yep, right there. So there we have 70. Just confirm it and send it, because the market is looking strong. So that was a counter trend trade, which I generally don't like to do, because obviously you want to go with the flow. However, at that point it showed some weakness, but the weakness was very temporary, and that's to be expected because it's such a strong market today. So I'll pause the video again, and looks like, at least so far from the morning session, the way to go in the markets today is on the bullish side. So we'll wait. It's also at elevated levels now. It's it's up. S&P is up 28 points. And the NDX is up 75 points. So at this point, let's just wait for some kind of a pullback, and then we'll look at the internals. And whenever we get a chance to move higher, I would prefer to take a bullish trade for the rest of the day. I also have a call at 12 p.m. So I may stop this video right now and probably come back around 1:30, unless I see a trade opportunity right away between now and 11 o'clock, in which case I will start it. So as of now, I'll just pause it for here. Okay, so it's 11:10. Markets are still at an elevated level. So right now, I think it's obviously a little too high to get in, and at the same time we don't want to take any counter trades. So I'm going to pause it now. I get some lunch and I have a call at 12 noon. So I will catch up in the afternoon session and see if there's a trading opportunity there. You never want to overtrade. If you see the opportunity, take the trade. Sometimes we'll have 1 to 2 trades a day. Sometimes you'll have 4 or 5. So it all depends. And so, but you never want to force a trade. Especially a counter trend trade. I mean, it's okay to try it. The only reason I tried it is because we had already made a profit of about 6,000. So anyway, I'm going to pause it now. We'll see you guys back in the afternoon session. Thanks. Okay, it's 11:31. I see a small opportunity. The indices have pulled back a little bit, but I see more of an opportunity with the NDX. So let's go look at NDX options. NDX options expire slightly differently. They don't have something that expires today. This is a 6-day option, so these are expensive options. And as you come to at the money, you can see the bid-ask spread is very wide, and you really don't need to come at the money at all because these are very expensive. And you can pretty much go out even to an 18 delta. And, here you have to watch out for the mid price and you have to negotiate the price, whenever you're dealing with the NDX. And so what we want to do is just let's go and say buy. And the mid price is 770. So here definitely you want to negotiate the mid price. You want to perhaps even put it a little less than mid price because if it goes down a little bit more, you'll get a better price. So right now there's some weakness showing in the indices, and I want to see if I can take a bullish trade, given that it's pulled back a little bit. All the market internals are showing some weakness or exhaustion. So it is. So this trade could perhaps be a little premature, but let's see. Let's do it and see. So I want to buy 10 contracts. At 770. I'm going to try to give the mid price and see if it gets filled. 770. Okay, again, we got a fill over there. So let's go take a look at the monitor and see how this one will do, and keep an eye on it. I'll pause it for now. Let me just resume here. You can see the NDX is down, but at this point, the internals are actually showing strength. And so normally I would have doubled right here, but I don't want to do it because I have a call at 12 o'clock and I don't want to manage that position through that call. So I'm just going to leave it at this, but I would have doubled down right there because the internals are telling me that the NDX is likely to go up, although the position itself is going down at this current time. It's going down. However, I would have doubled down here because I feel it's going to go up. So anyway, let's come back. Just a quick continuation. I've got about 7 minutes before my call, but as you can see, the internals looking good. I probably would have doubled, and if I'd done that, this would be positive. But I'm just going to keep this trade on and see through my call if I have to. If in the next 7 minutes, if it makes a big move, then I'll close it. But otherwise, I'll just keep it on for now and see what happens. It's moved. The signals, the internals are showing a decent sign of moving up now. Okay, let's see. It's 11:56. I have a call in 4 minutes. You can see it's moving up. And if I double down, this number would probably be closer to about $500 or $600. Let me just hold on to this for another minute or two. I will probably close it before just before I have the call. But I think, you would have gotten the picture from, about this trade, how it might have done. The important thing is, if we lost $400 on that earlier trade. If I can recover that, then, I'm happy. Whenever you have a decent profit for the day, you want to make sure you don't give it up. And that's always my top priority. And I don't want to give up a 5K, 6K profit and, just give that back. So right now it's looking decent. Let's see if it can move up another $300-400, then I'll close it. Or if it's at, 1158 almost. So I might hold it for a little bit more through the call and then see what we need to do. Okay, at this point, even though it's gone down a little bit, the internals are still looking good on the NDX. So what I'm going to do is double down and is to keep it through the call. So now we have the mid price at 670. So we basically we will be cost averaging down. So if we look at our average now, should be about okay, so our trade price now is 7.3 and we are at 6.88. So I'm going to pause it now. My call's probably going to happen anytime, but we'll stick through the keep on with this trade for some more time. Okay, folks. So if you look at it now, the signals, proved out, and I have a profit of about 1,100, totally about 7,000 for the day. So I'm just going to close it because I'm actually in the middle of the conference call, and so I don't want to deal with it. I'll take my profits and run. So let me just put this order in, and I want to close it. And if you now look at it, we've got the profit for the day is 6,600. Being a Friday, it's perfect, lovely. I mean, that's, this is what an average day might look like. Profit of, anywhere from 3K to 6K to 8K. A good day would be 15, 20, and that's possible too. But for now, I'm going to close this video and send it out, and hopefully you have a pretty good idea of how this market internals based trading is going to work. So here we go. Okay, folks, that was the end of the conference call. I thought I'd finish the video, and I did, but look what has happened to the NASDAQ. If I remember, what did we buy this for? The NASDAQ has just charged ahead, and it's what now, 111. So I was on the call for just a little over an hour. And if we, what did we sell? Yep, I sold it at 780. So bought it around 690, 770. So around, 730 or so. And look at this option. It's gone 14. It's at $14. So basically 20 contracts, a profit of 7. That would have been a profit of $14,000 right away. And one of the reasons I took it off was because I had to get on this call and I didn't want to mess up the trade. But, these kind of things happen. But just to let you know that double down was at the perfect time. Signals were all lined up perfectly. And that was a very ideal time. Anyway, it's Friday afternoon. So everybody have a great weekend, and we'll speak to you soon on Monday. Thank you.